Good morning, all. Steve Parisi here with IBC Global. Today, we've got a fun podcast lined up. We've got someone that I've known for 10, almost 15 years now.
Vince. That's right. Yep. Time flies.
It does. I don't know where it goes. I was like young. It was before I was married. Vince Gallo, a disability insurance specialist with Guardian, but you know all things disability, and we're going to have a nice conversation about all things disability insurance today.
Absolutely.
All right, so we'll have some fun, but before we get into that, can you just share a little bit about yourself, how long you've been in the business? I think that'll be a good intro, and then we'll get into the fun questions.
Yeah, sure. I've been in this business as a disability income specialist with Guardian since February of 2001. Gosh, time flies. I actually got into this business a little unique of way than most people, is that my background used to be in physical therapy. I actually went to school for physical therapy at Misericordia College, which is now Misericordia University.
Yeah.
And during my internships, my mother-in-law got disabled, and unfortunately she had dropped some of her disability coverage before it happened, thinking she never needed it and it never happened to her. And I saw firsthand what happened, and I decided to basically leave that industry and become basically a specialist. So I help advisors design plans to make sure the same things that happened to her doesn't happen to anybody else.
Look at that. I didn't know that you went to Misericordia. It's been a while. I went to Moravian, so we competed with them all the time, track and field and such. So when you got into the business, since I've known you, you've talked about Guardian disability insurance, which when you look at disability and contract language, they're very good. But have you always been with them, or did you just start somewhere else?
No, I was always been with Guardian.
Wow. Yeah. Very nice, but you've learned about other companies.
Yeah, so absolutely, you have to. There's no way one company can be the right fit for everybody.
I fully agree with that. So let's start with a basic question, like what is disability insurance?
Well, disability insurance is actually a relatively simple concept. Yeah. It's something to protect your most valuable asset when you're in your accumulation phase of your financial life, and that is your ability to earn an income. Because without the ability to earn an income, nothing else can happen.
Right.
That's the foundation of everything.
Protects me if I can't work. All right.
Absolutely.
So super simple example. Let's say I earn $100,000 per year. Okay. I have a disability policy. I got it 5 years ago. Something happens. I can't work. I get in a car accident, get sick, whatever it might be. How would it actually work? Like, what do I have to do, and how much money would I get?
Well, it depends on a number of different factors. Okay, so disability policies vary greatly in language. They vary greatly by the financial strength and reputation of the carrier. And there's just so many variables that we can't really get to. But so what I'm going to do is I'm going to answer that question as if we're talking about an individual, non-cancelable, guaranteed renewable policy. Now, I'll talk about what those things mean probably a little bit later on. From a reputable carrier.
Say I got the policy from Guardian.
Okay, well, specifically from Guardian. So basically what you're doing is you're buying a policy with a guaranteed rate and guaranteed structure, so the insurance company cannot change your language until the end of the contract. Which is typically be around retirement age. Okay. So you buy the policy. It's a fixed indemnity benefit where you will have a benefit that you've been paying for, and if you are deemed totally disabled by the contract language and the carrier, then you would receive the full benefit that you had been paying for.
Okay. Got it. So if I get that policy, so again, I'm making $100,000 per year if that's my income.
Okay.
I buy a policy. How much would it cost? Ballpark. I'm 35 years old when I get it.
It's really hard to say, again, because things vary greatly between what features you design, what your benefit period, what policy language, your occupation, your age, your gender, a million different factors. But I'm going to oversimplify, just to kind of give you a range. Okay. Generally speaking, if you had no other coverage and you're not supplementing something you're getting through your employer to make up a gap. You have no other coverage, and you're buying a quality product covering you typically to retirement age with the most common features. You might be in a range, I'd say maybe between $2,000 5% of your income. That's a big range there.
Yeah.
But it also factors in people much older buying a policy and things like that.
So if it's call it $3,000 per year, again, super simple. It
Yeah.
could be higher or lower. Okay, and I get disabled. So what would that policy what would it pay me if something happened to me? So say I got in a car accident. Contract language says yes, you're totally disabled. You can't perform your job right now. I earned $100K before, and if I didn't have anything through work, what could I expect to get in terms of benefits? How would that work?
Well, the policies are actually unlike group insurance,
Yeah.
which is something you would typically get from an employer.
Yeah.
Individual policies have what's called an indemnity benefit. That means the policy benefit is determined at time of issue, not at time of claim.
Okay.
In a total scenario.
Right.
So basically, let's just say it was a $5,000 a month benefit.
Yeah.
Someone making $100,000, could be a little bit more than that, but let's just use that for simplicity.
Yeah.
If you're deemed totally disabled, you would get $5,000 a month cash.
Okay.
Okay, and when you factor in that that's not a taxable event when you're getting a benefits on a policy you've been paying for, it actually winds up being a much higher replacement ratio.
Yeah.
In terms of what you're getting. But in addition to that, that's under a regular disability where maybe it become too stressful to work, or maybe your back hurts, or you're going through cancer treatment, or et cetera. But if something really bad happens, there may actually be scenarios where they pay you 100% of your income.
Look at that.
Through a catastrophic scenario.
Okay.
Like in a long-term care situation, blindness, can't speak, can't hear, inability to use any two limbs, things along those lines.
Right.
And there is something actually that I really like. It's called supplemental term.
Yep.
And what that rider does is that it actually helps people in the worst possible time. And the worst possible time would be if someone became disabled while they were young in their career. If I were to ask you which is worse, becoming, from a financial perspective, becoming disabled at 35 or disabled at 60?
Now at 35.
Yeah. Exactly. Because you didn't have enough time to build all the things you would have done had you continued to work. What the supplemental term rider does, it's unique to just one carrier. It provides extra benefits over and above anything else you qualify for the first 10 or 15 years of the policy, to basically give you an extra cushion because you didn't have enough time to do all the other things you wanted to do.
Got it. Look at that. And then the other piece you mentioned there, so with an individual policy, so again, assuming I don't have it through work right now, if it costs $3,000 per year, that's not tax deductible, correct?
Generally speaking, no. So I'll get into the technicalities of that.
Yeah, we'll hit on that later.
If you are paying for a disability policy for one of your employees,
as a business owner,
as a business owner, yes, you can take a full deduction for that.
Yep, but as an individual, generally no. But the benefit there, so you said the $5K per month, if that's my benefit, that generally is not taxable income.
Well, let me kind of go back and kind of get back into that. So for an employee, if you pay for the premium you're paying for it as a benefit to an employee, you take a tax deduction. The benefits are going to be taxable for that employee upon claim.
Right.
However, as a business owner, unless you own a C corporation, which is the only business entity the IRS allows you to take a tax deduction for paying a disability premium for an owner, then you cannot take a deduction for it, so you're paying for it with after-tax dollars, which then makes the benefits tax-free.
I got it, cool. And if it's just an individual policy that I'm not a business owner, when I pay for it, I typically cannot deduct the premium, but that benefit is tax-free.
That's correct.
That's nice, yeah. So that piece I learned, which I like a lot. So how about this question? If I've got disability insurance through work already, do I need a policy? Because I would think no, if my employer pays for it or comes in my paycheck, why would I get more on top of that?
Well, a lot of people don't realize that there's actually almost never is group insurance really providing enough coverage. There are a few exceptions to the rule, and the only way to really know is to look at it. But in general, okay, and maybe people can comment on this, but who here would be completely happy with an unexpected 40% pay cut while your expenses are higher?
Yeah.
Right? And that's typically, people hear, I get 60% coverage through my employer. Okay, well, is that going to be enough? Do you not need 40% of your income? And on top of that, for most people, it's just your base salary. bonuses and commissions are often not factored in as part of your income for calculating disability benefits. So that's one factor where it might be an issue. But the other bigger issue is actually the benefit cap.
Yeah.
And people don't realize this until often it's too late.
I don't even know what a benefit cap is.
Okay, well, I'm going to tell you.
Yeah,
okay,
that's why I asked.
So if someone is making, let's say they make $200,000 a year.
Yeah.
Okay, and their employer, they ask their person at HR and says, hey, how much benefit do I have? Mm-hmm. And they go, oh, well, you got 60%.
Okay.
And they might think, okay, so if I become disabled, 60% is going to be, $10,000.
Yeah.
Okay, mm-hmm. a month in benefit. Okay. However, there's always a cap to the maximum benefit per the employer. So if that individual had 60% coverage to a $5,000 a month benefit cap, mm-hmm. that person in reality only has 30% coverage.
Okay.
Okay.
Look at that.
And this is very, very common, a 5, sometimes 10, maybe if you're lucky, a $15,000 a month. So even though 60% isn't enough in most cases, most people are affected by that cap if they have a higher income, mm-hmm. and often they don't learn until too late.
Until too late, yeah. Mm-hmm. So, okay, I like how you answer that question really just by building awareness about things that I would have no clue about if I've got a policy through work. Thank you for going through that. I appreciate it.
Hey, no problem.
Yeah. So here's a question that I've always had, and I think a lot of people have, is why should I have disability insurance, especially if I'm healthy? Like I run every day, work out, try to take care of myself. And a lot of times I think, like, do I really even need it? Like, I'll just keep on taking care of myself.
Okay, well, I can understand that perspective. Why pay for something that you don't really need, right?
Yeah.
Okay.
Mm-hmm.
Well, I'm going to ask you kind of a silly question. I know you're also a car guy. Okay.
I am.
When you drive, do you wear a seatbelt?
I do every time. Yeah.
Okay. Mm-hmm. Well, why do you wear your seatbelt? You might not need it.
Just in case something happened.
Exactly.
Right.
Well, that's the same thing. Is that your most valuable asset is your ability to earn an income.
Yeah.
If you're in the stage of your life where you're acquiring and building wealth. And driving or living your life without protecting your income in the event of disability is like driving around in your car with no seatbelt.
Yeah.
You're fine until you have an accident or until something happens, mm-hmm. and then it's too late.
Right. Got it. Yeah, good use of questions to help build that awareness, because I have thought about it more since talking to you.
Yeah.
So how about this? Can you give me an example, just over the years of doing this, because you've been doing it for a while, of someone that had a desk job, so someone that's not at risk of getting hurt on the job?
Sure.
They might have thought, do I really need disability initially? But they did get it, mm-hmm. and then they used it because something happened.
Oh gosh, there's been so many examples.
Yeah.
I mean, there's anything from someone getting cancer to someone being robbed and shot to someone having a depression issue to having back issues to getting multiple sclerosis.
Yeah.
There's even one scenario where someone who was very hesitant of buying a policy actually purchased a policy, and out of nowhere the person was on vacation, overcome by a wave, and hurt their neck.
I've heard that story.
And there's so many different things that can happen. Mm-hmm. In fact, many people don't realize this, but these individual policies are priced, with approval by the states, mm-hmm. and typically they're priced with a 55% loss ratio. Okay. That means 55% of all the policy's premiums are expected to be paid in benefits to insureds.
Wow. Okay.
And the rest of the cost is this administration of getting the policies issued and whatnot. And the carriers really only make about 6%, give or take, on that premium.
Got it. So it's a volume play, really.
Yes, absolutely.
Yeah. Got it. So you mentioned something, depression. So is that something that can be covered in a disability policy if someone?
Well, it depends on
health.
It depends on the options and
Yeah.
what carrier or what design the client chooses.
Yeah.
But there are some carriers out there, Guardian being one of them,
yep.
that does have the ability to issue full mental and nervous, which is what the industry terms depression, anxiety, mm-hmm. full mental and nervous coverage on a disability policy.
Yeah. Have you seen that more people exercising that? Because I know over the past 3-4 years, mental health has become a big thing. More and more people are affected by it. Have you seen people go on clean because of that? Just Yeah.
Yes.
You have, yeah.
Yes, I have. I can't go into details.
No. Yeah,
But yes,
yeah.
I have seen numerous claims.
Yeah. I mean, that's nice that they offer that.
Yeah. And it depends on the client. I mean, I always like to say that in an ideal policy, or a best design you can get is to have full coverage for that if you can.
Yeah.
Because bad things happen to good people.
Yeah.
You could have a spouse die in a car accident suddenly. You can have a kid get diagnosed with cancer and you just can't concentrate at work.
Right.
And you can save typically 10%, give or take, on the policy if you choose a 24-month maximum in those claim scenarios. But it depends on what's needed for the client, and individual policies are all custom tailored to meet exactly the needs of the client and what the client chooses to buy.
Yeah, that's nice. We can customize it and choose if you want that mental and nervous feature attached or not.
Yes.
And then it might cost a little bit more. That's nice, though. It's not just a fixed price. You can actually choose what you want.
Yeah.
So let's say I have a health issue, or I had one in the past. Maybe I had depression, or I hurt my back in the past. Can I get a disability policy to cover that specifically? Like if I'm already injured or I've got a disability?
Well, it depends on the scenario.
Yeah.
Okay. And again, things vary greatly depending on how long ago something happened, or if it's current, or how severe it happened to be. But generally speaking, disability policies are there, and they're designed, to cover things that haven't happened yet. Which is why you want to get a policy as young as you can before you develop certain conditions as we get older. Now, with that said, if you have certain conditions, they really wouldn't care. Like, for example, I wear glasses, okay? They would not say, we're not going to cover your eyes because you wear glasses. It's typically not something they're going to do.
Right.
People also I take blood pressure medication, people take a cholesterol medication and things along those lines. And as long as it's under control, the carriers typically are not going to say, we're not going to cover your heart because you're taking, cholesterol medication. So it depends on the severity, of the item.
Yeah.
But if someone has, more of a medical condition, like they go see a chiropractor and their chiropractor medically diagnosed certain problems with certain parts of their back, that's likely going to be excluded, because they're getting treatment for that and it's diagnosed, in their history.
Yeah, and can you just explain a little bit like what that means? So if I get a disability policy, let's say I had a back injury and I'm treated for it regularly, and I'm approved for the policy, but then in the language it says exclusion for back or something related.
Okay.
What does that actually mean for me buying that policy? Like, how would that work if I
well the way it works is that the policy is there. They're trying to contain the risk and issue a policy on as many people as they can.
Yeah.
Okay. So it depends on the situation. They're always going to look back and see what was the original intent. At least a quality carrier is going to look to the original intent of the exclusion. And you never want to not file a claim. I always encourage anyone to file a claim if they have a condition, even if, if they have a covered condition, even if it's specifically excluded, because you want to make sure that you want to have the carrier tell you no. You don't want to just assume they're not going to pay you if you have an exclusion. Always do that. But in terms of how it would work is that you file a claim, they're going to look and they're going to say, okay, you have this pre-existing condition that we specifically excluded on your policy, and they may or may not cover that back claim if it was that specific area. Now, in most scenarios, exclusions tend to be somewhat specific. So while it is possible to have an exclusion for your entire spine, more often than not, it's limited to a certain area. Like, for example, if you had a low back injury and it was between L4 and L5, one part of your spine, just that particular component may be excluded.
Yeah.
And there's also something called except fracture wording, where basically if you can't say, oh, my back hurts, pay me $20,000 a month, okay? But it says, except fracture, if you break your back, there's no limitations on how they would pay you.
Look at that, right? All the small details in the contract.
It's all in the fine print,
which
is why you need to make sure you buy a good policy.
I fully agree with that. Yeah, like my biggest fear, I think everyone's fear would be, you don't want to pay for anything and then have the insurance company try and get out of paying a claim, because that's where people feel hurt, right? Or it can be a lot worse than that. But that's always the fear, but really it's the contract language, and I think awareness too.
Well, also the claims-paying reputation of the carrier itself is a factor.
Awareness. Like if you tell me up front, hey, you have an exclusion on your back and went through what you just went through there, I'm going to know, okay, if something happens to that specific area or I can't work because of this injury I've had for the past 10 years, then I might not get the claim, and I'm still okay paying for it knowing that.
Yeah, absolutely. I mean, if you've ever seen, people don't really use them anymore because, internet age, right? But there used to be something called a physician desk reference guide. It was a really small book with really, really tiny print that was maybe 1,000 pages thick.
That's nuts.
And it listed all the medical conditions so a physician could quickly look them up if they needed to. And basically, you're not covered for a line or two in there, but everything else you're covered for. So it's just another way to look at it.
Okay, got it.
And just from experience, very rarely do the things that wind up being excluded actually result in someone becoming disabled. Usually it winds up being something unexpected and something else.
Yeah, that makes sense. So let's shift a little bit. I want to talk about getting policies for businesses. I want to talk about business owners and then also employees too.
Okay.
So let's start with the business owner. So an owner is considering getting policy for himself and for some executives or employees, but starting with themselves, he or she, if they get a disability policy, can that cover their salary and distributions or bonuses that they take? Because a lot of business owners will typically take a small salary and then big distributions if they have a good year.
Yes.
Yeah.
While many group insurance plans won't, all quality individual carriers out there would cover your full income, the W-2 that you pay yourself, plus whatever distributions are there. And in fact, even RSUs, restricted stock units, many of those can be covered as income as well in many situations.
Look at that. So how would you price it if my distributions vary, right? Last year it was 100 grand, the next year it was 700 grand. Like how do you factor that in when you deal with someone that...
Well, it's always a case-by-case basis. Now, I'm oversimplifying here, but if someone is slow and steady going up in income, they're going to go by the most recent year. Now, if someone has a crazy jump, like an example you made before, the year before they made 100, and then the most recent year they made 700. That's a big jump. They might do an average on that. Okay. But then if there was 700 or 800 the next year, they might say, okay, well now this is trending, so we'll go again with the higher number. But if it's up and down, they could always do an average. And again, it's going to be a case-by-case basis to determine what makes sense for that individual.
Nice. But that is nice that you can include those bonuses or distributions, the variable part that business owners rely on a lot of times.
Oh, absolutely.
So as a business owner, can I deduct the premium payments?
No, we talked about this a little bit before, but it's always good to touch on this because it's a very common question that people have. Is that if you own a business and it's not a C Corp, you cannot take a tax deduction on the premium for yourself, but you can for your employees.
Got it. Okay. So that's still a benefit there. So are they typically...
However, I do recommend, if it's an individual policy that you're doing to supplement group insurance, I always recommend to convert it to tax-free. And the way you would do that is you would bonus it at the end of the year. So if you had an employee who was making a $100,000 flat salary and the cost of doing a supplemental plan for that person was $1,000, the end of the year their W-2 would show 101.
Yeah, kind of like, I got you. Similar to an executive bonus plan with life insurance.
It works exactly the same way.
Yeah, got it. Okay. So if I'm going to take policies for my employees, is it typically set up, or do I have the option to fully fund for it if I want to pay the entire premium for all employees, or can I split it with them?
Yeah, you can do whatever you'd like.
I can,
for the most part.
Sweet.
So sometimes for discounts, the discount is established if the employer pays some of the premium. And in some situations, if the employer pays a base amount of premium or benefits per a class of employees, they might give the option of the employee to buy up at the discount. Now, that may not be guarantee issued. It may be medically underwritten in those scenarios, but there's always that option to do that.
When is it guaranteed issue? Is there a threshold for that?
Well, that could be its own podcast. So that could get into a lot of details there. But yeah, there are actually situations where we can guarantee issue a non-cancelable, true ONOC individual policy covering all pre-existing conditions, starting at 3 lives employer paid.
Okay, look at that.
Okay,
very nice.
No, non-medical, so have to be like a attorney or something along those lines. But there are scenarios where that can happen. That it gets a little complicated. That could be a whole different podcast. So if there's interest, just let Steve know, and I'd be glad to do one on that.
Comment below, no problem. So what if, again, I get policies for all of my employees and someone leaves or they get terminated? They're with the company, they get disability, they're no longer with the company. Is that policy terminated because the business owner probably doesn't want to pay for it anymore? Like, how would that work for the employee specifically?
Well, when it comes to a group insurance policy, ones that are not individually owned, they're issued by the company, those are not typically portable. The underlying coverage typically is gone. However, an individual policy, that is fully portable, whether the employer is paying for it or not. It's owned by the insured. So even though the insured may not be paying for that policy while they work for that employer, they still own that policy and they can take it with them when they change jobs.
Okay, yeah. So if I got policies for, call it all of our managers, right, or our top 10 employees to start, I could pay the premium for them, or the company could. Technically, they own the policy.
That's correct.
But then if they leave or they're terminated, whatever, they can elect to take that policy with them, but they would just have to pay the premium now.
Yeah, exactly. Yeah.
Okay.
Yeah, these policies are designed for people typically to buy them and then keep them their entire working career.
Look at that. Does the premium go up once you start it?
Once the policies are issued, depends on what policy and design you're getting, but in most situations with a level premium, once the policy is issued, that rate cannot change until retirement age. Many companies out there will give you the option to keep the policy going for life as long as you're working still full-time beyond a certain age. So for example, if the policy is non-cancelable, guaranteed renewable to age 65, which is one of the options you could choose, then on the policy anniversary date after the 65th birthday, if the person is still working at least 30 hours a week for a certain number of months a year, I don't remember the exact number, they can keep the policy going another year, and every year they'll be asked the same question. And as long as they're working full-time and they want to pay for a policy, they can keep it.
Got it.
It's a 2-year benefit period after 65, and then if they're still working at 75, it's a 1-year benefit period.
Cool. Check that out. Thanks for dropping that knowledge.
Sure.
So here's a fun question. If I don't want to have a premium forever, can I just pay a lump sum? Is there a way I can pay for it all in advance?
Unfortunately not. Now, I know you could do that on the life insurance side, prepay in advance and things like that. On disability policies, you can't. The most you can prepay is the annual premium. Okay, so every year you have to pay the annual premium. That's the most that you could prepay, essentially, versus doing monthly. But it doesn't really mean you don't have options. So, for example, even though the policies are structured in a way that the insurance company can't change things and force you to do whatever, it doesn't mean that you don't have control of that policy. So for example, even though the policy is non-cancelable, guaranteed renewable to, say, 65 in the example I gave before, that doesn't mean that the client has to keep the policy to 65 if they don't want it. So for example, if they retire at 55 or they win the lottery, there's no requirement for them to keep that policy. They could drop it because they would no longer need it. But other options too is the client can choose to lower their benefit, to take riders off.
So you can reduce it.
You could reduce it. You could do. You have the option to have control of that policy as long as you increase risk to the insurance company. Like for example, you can't say, "Oh, just double my benefit." Now. Well, that would trigger underwriting. But as long as you're lowering risk, you have the option to do that. Extend the benefit period. Lower extend the waiting period, lower the benefit period, take riders away.
Similar to life insurance, easy to reduce, not easy to increase with an existing policy.
Yes.
So is it like health insurance? So again, this is a question for a business owner. If I offer it to one employee, is it something where it has to be offered to everyone then?
No, it doesn't. You're allowed to discriminate by class.
Okay. What does that mean by class?
Well, class would be like, for example, if you wanted to offer coverage to all your executives at your company, you can do that. If you wanted to offer it to those who have been at your company for more than a certain number of years, above a certain income, you can do that too.
Nice.
You just can't say, Steve, I don't like you, but I like her.
Right.
Okay, so I'm going to give it to her because I don't like you. As long as it's
Reasonable and fair.
And fair, you can do that. And besides, people discriminate all the time at work because otherwise you'd have to pay all your employees the same wage.
Correct.
You know?
Yeah. Yeah. But so what you can do there is create a vesting period or something like that. After 3 to 4 years, whatever I want to do, that's when you then become eligible for this benefit, like I would with anything else.
Exactly.
Okay.
Yeah.
Cool. I like that. Thank you. So if I'm an employee, what do I need to do in order to get quotes? So,
well, typically, what I recommend is you want to provide your name, your date of birth, your gender, your job title.
Yep.
Sometimes you might need some follow-up questions depending on if it's not so clear what you do.
Yeah.
Your salary, and then if you have commissions or bonus.
Okay.
And then lastly, if you have any medical issues, you really want to tell whoever you're dealing with those details because it may steer which carrier and what options you may or may not have.
Got it.
So you want to be upfront with those. So if you take certain medications, you want to tell the person you're dealing with that. If you have any health history, you want to be upfront and tell them that because there's many different companies out there and options, and you may want to choose the right option for you. And the more information you have up front, the easier it is to get to help you the best way possible.
Got it. Okay. So let's talk about carriers a little bit. How many carriers? A carrier is a life insurance company. How many offer disability insurance?
Well, there's actually quite a few.
Yeah.
If you talk about the group insurance side.
Individual.
So right, but when it comes to individual,
yeah,
there's really only a handful. There's really not that many out there, and part of it has to do is because, like I mentioned earlier, it's a very risky business to be in because if the carrier made a mistake, they can't say we want to change our rates to cover our losses. These are policies fixed in stone. Essentially, they can't fix mistakes they made. So it's a very risky business to be in. So most carriers out there choose not to be in this business.
I get it. Look at that. Okay. Is it common for companies to try and get out of paying claims? Have you seen that a lot over the years being in the business?
Not really.
No?
I mean, at least with a financially strong, reputable carrier, you really don't see that.
Okay.
And I can't speak for all of them, but most of my experience has been with Guardian claims.
Yeah.
And I've personally seen them bend over backwards to help people out in claim scenarios.
Yeah, that's
and
important.
even pay claims when they probably didn't even have to.
Look at that. We've had positive experiences on the claim side of the life insurance side of things, where they are proactive, trying to get all the information so they can pay quickly, which is nice.
Yeah,
because that's hard when someone.
It is. It's very stressful.
Yeah.
It's hard to imagine how stressful that would be.
Yeah.
Because if you are someone that has a change in health and your lifeline to your financial future is your disability policy's benefit, having fear of if that policy is going to do what you intended it to do can be very stressful.
Yeah, and from the company standpoint, like if I'm the company or even the agent that has the relationship with the person, I want that to go quick. Otherwise, like that is a prime opportunity for reputation damage.
Yes.
You know what I mean? When someone's in that state, like if things don't happen like they're supposed to, people rely on it.
Yeah.
So you got to be quick. So what companies do you usually recommend for an individual disability policy?
Well, it depends on what the person does.
Yep.
I mean, if the person's a professional, my go-to is usually Guardian.
Yeah.
But of course, obviously, it can't be a fit for everybody, and there are some certain situations where Guardian's not going to issue certain medical conditions. So I mean, you might have to go to a number of different carriers depending on the situation.
Yeah.
When it comes to blue collar, most of the primary individual carriers don't deal in blue collar, so you have to go to more of the secondary market there. And there's like a Surety and Illinois Mutual and sometimes Peterson where you go to for those.
Got it. Okay. But so if I'm white collar, if I am a professional, which could be an attorney, physician, CPA,
a small business owner, basically as long as someone, if they're white collar or professional, in most situations, you'll be at least occupationally, you should be okay with Guardian. Not in all situations, but most.
Is that their like bread and butter? Like if you were to ask Guardian, the head of disability, if I said, who's your ideal like client or prospect, what would he say? Off the record.
Well, I think I'm being recorded, so it is kind of on the record. But I'd say it'd probably be anyone who's a professional that has a stable income
Yeah.
and has invested a lot of their energy into becoming a professional in whatever they do.
Okay, got it. So we hit on contract language a bit as far as when I get a disability policy, like what am I looking for in there? Obviously, like the premium, that's where everybody's eyes are going to go first.
Right.
And then how much am I getting? If I do get disabled, how much will that actually pay? But like if I'm your friend and I say, hey, I'm getting a disability policy, what should I look for? Like what are the top 1 to 3 things that you would say, make sure it has this, or make sure that this language is in there?
Well, if there's enough comments and there's interest, I can actually do another podcast on what makes a good policy.
Yeah.
That would be something that a lot of people might find interesting. So I'm going to kind of answer that really, really quickly.
Yeah.
Okay.
Fantastic.
But in general, you want to make sure it's issued by a strong and reputable carrier.
Yep.
You want to make sure the policy has a non-cancelable, guaranteed renewable structure, so that you have control, of that policy.
Yeah.
You want to make sure it's what's called true own occupation. You're covered in your own occupation, even if you choose to do something else.
That's important.
It should have a quality partial feature with an unlimited recovery. So while you're rebuilding your career, it could still pay you benefits even after you recover. Inflation protection, like cost of living adjustments. An additional catastrophic feature that gives you extra benefits if something really bad happens to you. And also that supplemental component like we talked about before. For when you're younger, you get extra benefits, and even retirement contribution protection. That's income people don't think about.
Yeah,
When they become disabled, your employer can no longer contribute to your 401k plan, and neither can you because you no longer work there.
Yeah, look at that. We can definitely have another podcast on that.
Yeah.
So let's say I get a disability policy, I'm approved, but at the time of getting it, I had a health issue, maybe I was a smoker, and my premium was higher, and let's say I've cleaned up my lifestyle a bit, can I upgrade that current policy to lower the premium without removing any benefits, but assuming I'm just healthier now than I was 5 years ago? Does that make sense?
Absolutely. You can always apply for that.
Nice.
While the insurance company can't make anything worse if you had a change in health, if your health gets better, you can apply to have a rating taken off to do something better with the policy than what you currently have.
Yeah.
So you always have that option.
Look at that. Well, this has been fantastic. I guess wrapping up, who's not a candidate for disability? Like, when would you tell me, hey, this is probably not a fit for you?
Basically, someone who has significant medical problems.
Already disabled.
Already disabled, or even not already disabled, just uninsurable from the point of they have too many medical conditions that an insurance company just would not take the risk.
Yeah, got it. And if I'm uncertain if I can get it or not, there's things you can do just to screen it. You talked about just before when we spoke, that questionnaire, which is not applying for a policy, it's just like a preliminary health screen where the insurance company will look at it, see how you answer those questions and say, okay, you'll probably be able to get this, or you might not be able to. It's not formal, but it gives you a good idea.
Yeah,
right?
There's the e-med that we can send out even without an application that can review, and you have to be thorough and complete because that's what's being used to look at things. And you can use that as a way to see if there's any major red flags that are there and to make some recommendations based on that before you actually do an application.
Nice.
Why submit an application if you know the person's going to be declined because they just had a heart attack?
Nice. So if I'm healthy and I said, okay, can you give me an idea of what my premium would be? You could show me what it looks like with a basic disability policy, then all the bells and whistles with all the riders you mentioned, and then the most popular option. But if I had some health issues and I said to you, hey, I'm thinking about getting it, I'm concerned, but I don't think I'll be able to get approved.
And you could always ask.
Right.
Yeah.
So you'd say, yeah, you might be able to. A lot of people feel like that. Complete this medical form, the e-med, and then you can tell me, yeah, it's likely, or you probably won't be before I go through the full underwriting process.
Yeah.
Nice. Cool. Well, this has been fantastic. Anything you'd like to wrap up with today, my friend?
No, just list in the comments section if you had any subjects you want me to expand on.
Definitely, will do. Well, if you have questions or like more information, let us know in the comments below. You can always email us direct as well. And thanks so much for watching. Vince, appreciate your time.
Hey, anytime.
All right.
Thanks, Steve.
See you soon.